Hey everybody, Smart Silver Stacker here. Let's talk about the Fed and the FOMC meeting that we got yesterday. Jerome Powell's comments at the FOMC in regards to a taper of asset purchases by the Fed and then also a liftoff of interest rates, and what the likelihood of those two things occurring actually are. I'll put a link in the description for anybody who would like to go see Jerome Powell's commentary for themselves. It's about an hour long, the prepared remarks and then also the Q&A that follows. The gist of it was essentially that a taper is coming soon, but it's not going to start yet. Ever since the beginning of the crisis last year, the Fed has been purchasing $120 billion of assets every month. Basically, what Jerome Powell was saying was that going forward, if there are indications that the economic recovery is intact and it's strong and it's continued, that in the very near future, the Fed is going to begin the tapering of those asset purchases. Now, he also referred to performing the taper at a kind of a moderate pace, but with the timetables that he laid out, it would actually be kind of accelerated, especially if you look at previous tapers, like back in 2015, when the Fed began to taper and began to raise interest rates. That was at a much slower pace than what he described in the FOMC meeting yesterday. What he laid out was sometime probably in 2021, beginning to draw down those purchases and then to be finished with the taper by the middle of next year. So by the middle of 2022. So essentially, because we're already in September and it's 2021, the taper is going to, according to the timetable he laid out yesterday, it's going to be finished up in less than a year. And that seems like a pretty narrow window to be ending $120 billion of asset purchases every month, especially when markets seem to be so dependent on Fed intervention. So I suspect that we're not going to see any taper, or if we do, we may see the beginnings of one, but I really find the idea that the Fed is going to be able to completely end their asset purchases by the middle of next year. I find that notion to be highly suspect, and I don't really think that that's likely to occur. Now, as far as the liftoff or the raising of interest rates from the current extremely low level, that we won't see for a while. Jerome Powell indicated that he and other members of the FOMC would like to see the taper completed before they even begin the liftoff. Definitely no moves up in interest rates by the FOMC until at least 2022. And then at one point in his commentary, he mentioned that all but one of the FOMC participants believed that interest rates would begin to move up in 2023. Now, I think this is all extremely ambitious for both Jerome Powell and the other participants in the FOMC to just lay out this timetable and think, well, this will be easy. We'll just go ahead and taper everything over the next year or so, and we'll stop intervening in the markets and we'll stop providing all of this liquidity. Because I think it's fairly obvious at this point, with the record highs that we see across the board in stocks, in real estate, in assets like cryptocurrency, that if the Fed actually moves forward with first the tapering and then this normalization and raising of interest rates, I don't think there's any way that those bubbles are going to be maintained. And that is going to be problematic, because I don't really think that there's going to be a lot of political will to crash the stock markets, to crash the price of housing, and certainly the only thing keeping those bubbles inflated at this point is the Fed. It makes me think that at some point over the next couple months, the remainder of 2021, there's going to be some catalyst for the Fed to change its tune. Now, like I said, there was quite a bit of conditional language in the way Jerome Powell laid this out. He repeatedly stated that there would be no Fed taper or normalization of interest rates, no liftoff, if the economic recovery in any way looked like it was in danger. And I don't know how he can say that with a straight face, because obviously tapering the asset purchases that have inflated these bubbles puts the bubbles in danger. Now, if asked, Jerome Powell would simply deny the fact that there are any bubbles, but if you look at conditions in the market right now and you don't think there's bubbles, well, I got a bridge to sell you. Everything is in bubble territory. If you look at any indicator right now, it shows that the vast majority of assets are definitely towards the top end of their possible valuations. PE ratios for stocks are quite high. Housing is just insane. I'm sure any of you out there who are shopping for houses or looking for houses or even looking for rentals at the moment know that prices in real estate are really high. One of the other things that was discussed at the FOMC was inflation. It was brought up in a few of the questions in the Q&A, and basically Jerome Powell just said that all of the inflation was due to supply chain bottlenecks. He repeatedly indicated that sectors that have experienced high prices, it's simply because of supply chain issues and bottlenecks in the supply chain, which is causing shortages. And like I've said in previous videos, I'm sure that the supply chain has something to do with the rising prices, but the real catalyst for the rising prices that we're seeing across the board is simply all of the currency creation. To think that we can inflate these bubbles like we have with all the easy money, to think that the Fed can simply inflate those bubbles and then somehow normalize policy without pricking those bubbles, I think is pretty naive to believe that. So I don't think that we're going to be seeing too much tapering or see the liftoff anytime soon. The Fed may attempt to begin the taper. I'm sure that, they could draw down the asset purchases somewhat. Maybe they'll switch to $100 billion or $80 billion or $60 billion. Who knows? It'll have to be a gradual thing. But once they start that process, I think it's highly unlikely that they will complete it. And I really don't think that they'll be able to actually end all of the asset purchases, let alone begin raising interest rates, because he did lay that out as a criteria for the liftoff and raising interest rates, that the taper would have to be done first. So I really don't think we're going to see that. I think that once it becomes clear to investors and to the market as a whole that the taper is really all just a bunch of talk and it's all baloney, I think that the asset bubbles that we see, the real estate and the stocks and crypto, probably have room to move higher. And also, I think that precious metals are really going to start catching a bid once that happens. Now, if you saw the video I put out yesterday about junk silver and the potential shortage in junk silver, in some of the physical bullion products, we may already be seeing silver catch a bid, even if we're not seeing it in the spot price right now. And when I put out that video, I had a couple of people comment that their local coin shops had plenty of 90% silver, and it was just the online dealers that had these high premiums and the lack of availability. Well, I suspect that the cause for that might be that the local coin shops still have some inventory that they got at a lower price. They usually will order a couple of big bags of junk silver if they're selling a decent volume of it. And once those local coin shops run out of their junk silver, they may actually have a hard time getting those bags at the same wholesale prices that they were getting before. So I still think that there may be an ongoing developing shortage in junk silver. So even if the local coin shops have it available for a low premium, I would say that that's just a good opportunity to stack that up while you still can. If you can still get some low premium junk silver, I would snap that up from your local coin shop, because I expect that even their prices will be moving up shortly. Now, one of the things that Jerome Powell did say as he concluded his prepared remarks at the FOMC was, and this is a quote, the Fed will do everything it can to support the economic recovery for as long as it takes. So I think that kind of language makes it pretty clear that if there is any kind of a negative reaction to the beginning of a taper or the beginning of raising interest rates by the Fed, they are prepared to end that taper and to open the faucets of liquidity and of money creation back up. And I suspect that that's exactly what we are going to see. The reason is because, we've had this easy money policy, and the Fed has been supporting, the quote unquote economic recovery for so long now, that we really have this economy. What it's akin to, it's like a forest. In a forest, when there's a lot of dead wood and accumulated brush and things like that, sometimes they'll do a controlled burn to eliminate all of that undergrowth. Well, the Fed's been doing the opposite for the past 20 years. What they've been doing is every time a fire starts in the economy, they rush in and they put it out with all of this liquidity and all this easy money. But what that's done is it's created this situation. It's like a forest that has all of this dead wood because nobody is letting any of it burn. And we have all of these companies that have been supported by the easy money policy. All of these companies have been bailed out. All of these ones that should have been eliminated long ago by normal market processes. We have zombie companies that don't contribute anything any longer. They don't produce anything viable in the economy. They don't add any value, but they've been kept alive by low interest rates and by interventionist Fed policy. So we're at the point where even the smallest spark could really trigger a major conflagration. And so, whatever the pin is that's going to pop the bubble that the Fed is inflating now, I don't think anybody can really predict. Black swan events can come in lots of shapes and sizes, and the whole point with a, black swan event that pricks your bubble or starts your fire, whatever analogy you want, is that they're unpredictable. So who knows what we will be seeing as far as events like that. But with events like, what we saw last year, the health issue, I'm not going to mention it by name because I don't want to get taken off of YouTube. Things like that, whether it be an event like that, or it be a war or a natural disaster or a problem in financial markets, things like that are inevitable. There's no way to avoid them. They always are going to happen. They've happened consistently throughout history. It's just the nature of the world that we live in. What you can do to prepare yourself for those is to kind of make yourself robust, to make yourself resistant to those things, maybe even to make yourself anti-fragile, put yourself in a situation where you benefit from chaos and events like a black swan. But we've done quite the opposite. We have put out all of the economic fires that would have cleared our economy of all the dead wood and companies that are inefficient and indebted up to their eyeballs and not productive. And instead, we've allowed those companies to exist and to persist. And so rather than having a resilient economy and monetary system that can withstand the bumps and bruises that we're going to get along the way, we've made an incredibly vulnerable system that it doesn't really take much to collapse the whole thing. And that is why at the moment we have Fed intervention in the form of asset purchases. That's why we have record low interest rates in the first place. To think that we're going to be able to just normalize things and not have any problems is kind of a pipe dream. But we'll see going forward. Only time will tell. It'll be interesting to look at the next two FOMC meetings. We've got two more this year, so we'll see if they change their tune or if they possibly begin this taper. But I think the outcome of a tapering is fairly predictable. It's going to be a negative reaction from markets, and when that happens, we know how the Fed will respond. There will be more easy money because, they really only have a few tools in their toolbox. They can't do much other than provide more fiat currency. That's basically the role that they have created for themselves in the modern economy. In the meantime, gold and silver are still super cheap, and they may even drop further on the news of this taper. It's kind of hard to know how the precious metals will react. And of course, I'm just referring to the spot price. Like I mentioned earlier, in some of the physical products, like now junk silver, we've been seeing in American Silver Eagles for a while, the super high premiums, but that seems to be moving over into other products, and it may move into physical bullion as a whole. But I think that really we should be taking advantage of these opportunities, these low silver prices, and that's why I am still stacking. None of this is investment advice. I'm not an investment advisor. I'm just a guy on YouTube, so take it for what it's worth. But when you see the environment that we're living in, the state of the world economy, the state of the US economy, the fact that we have $28 trillion in debt, the fact that that number is going much higher, the fact that government spending is at record highs and the deficit is at record highs and money creation is at record highs, just the fact that over the past year or so we've printed basically 20% of our entire currency supply, to think that those trends will reverse themselves because of a nice statement from the Federal Reserve Chairman. Again, I just don't really see it happening. So, not financial advice, but if you don't have any of your wealth stored in hard physical assets like gold and silver bullion, you might consider picking some up. Let me know what you guys think. How did you interpret the comments from Jerome Powell at the latest FOMC meeting? What do you think? Is there going to be a taper? Do you think that they'll be capable of doing the taper? If they are, do you think they'll ever be capable of raising interest rates and getting the liftoff? I would love to hear what you guys think, so let me know in the comments below. And if you like this video and you'd like to see more videos about inflation and monetary policy, the Fed, gold, and silver, there will be some videos popping up on your screen right now that you can click on, so check those out. And I will catch you next time. Keep on stacking. Smart Silver Stacker out.